In this video, we're going to cover 6 things that you can do before the end of financial year to maximize your tax refund. And if you stick around to the end, I'm going to save the best to last. All right, number 1, buy any office equipment you might need. If you're working from home or if you're running a business and you have an office as part of that business, if you need a new phone, if you need a new computer, if you need new speakers, printer, any kind of office equipment. If office equipment is normally tax deductible for your situation and something needs replacing that you normally use, go out and buy it now, claim the deduction this year. Number 2, if you had a capital gain throughout the year, so if you sold an investment property, if you sold some shares and made a profit, if you also have an unrealized loss on something, so if you also have a parcel of shares that are currently running at a loss, you can sell them and offset that loss against your other capital gain. Number 3, if you are earning over $90,000 yourself, or if you are in a couple and you earn over $180,000 together, you are liable to pay the Medicare levy surcharge. This is an extra 1% tax on your taxable income. But if you go out and get private health cover, then you will no longer have to pay that 1% surcharge on the Medicare levy. This is in addition to the Medicare levy that most people pay. So if you're earning $90,000 and you have to pay this extra 1% Medicare levy surcharge, that is an extra $900 that you have to pay that you wouldn't have paid if you had appropriate private health cover. Now this one, you only get the tax deduction for the number of days prorated in the financial year that you had the health cover. So if you do it late in this financial year, you'll get a small deduction this year, and then you'll get the full benefit next year and ongoing, provided you maintain that health cover. Number 4, if there was a charity or a cause that you wanted to contribute to, you can make a donation to them, provided they have DGR status, that's deductible gift recipient status. Most big charities in Australia will have that. You can go out and make a donation to this charity that you want to support and claim a tax deduction for this in your personal tax. So you get to do some good for society and do some good for yourself at the same time. Number 5, prepay any bills, including professional memberships and insurance policies. If you are in a profession that requires you to have a professional membership, like if you're an accountant, you might be a CPA or a CA. If you're some other kind of profession, there might be some association body that you pay an annual fee to in order to be recognized as a certain registered profession. If the bill for this is coming up in a couple of months, pay it now. You can claim the tax deduction now. Same goes for insurance. If you have tax deductible insurance, it might be income protection insurance. If you're running a business, it might be a business insurance policy. If that's coming up in a couple months' time, you can pay that now before 30 June and claim the tax deduction in this financial year. Number 6, this is the one I left for last because it's the best one. Make a personal super contribution. You are allowed to put in $27,500 into your super fund every year. This includes what your employer would already be putting in. So if you are on $100,000 a year and your employer put in around $10,000, that means you can put in a further $15,000. The best thing about this one, why I like it so much, is because you get a tax deduction for paying yourself. You put your own personal after-tax money into your superannuation fund and you collect a tax deduction. You do have to pay a 15% tax on the money when it goes in as a contribution tax, but for most people, 15% is a hell of a lot better than you'll be paying on your regular income tax. So there you have it, guys. 6 quick and easy things that you can do before June 30 to reduce your tax bill or to increase your tax refund.